Now reporting, David Muir.
And good afternoon. We come on the air at this hour because we are monitoring what has been a volatile day on Wall Street. The Dow set to close imminently. It's been down more than 700 points for much of the afternoon. You can see it's down 764 points right there right now. Investors have been rattled all day amid new signs of a possible recession ahead. In fact, one key bellwether on Wall Street, the 10-year Treasury note, the yield on that today, that 10-year note, dropped below the 2-year yield. That's very rare. It's known as an inversion yield curve, and regardless of what it's called, that has preceded recessions many times before. Of course, it could be wrong this time, but all of this comes as the president has escalated the trade war with China. The president tweeting today, "We are winning big time against China." He goes on to say China is not our problem. Instead, it's the Fed. You hear the closing bell right there, down 798 points as we approach 4 o'clock here, now more than 800 points. This is a significant day on Wall Street. In fact, the largest drop so far this year had been last week, 767 points. But there you have it, closing down 800 points today. Let's get right to our chief economics correspondent, Rebecca Jarvis. You heard the president say it is not China, it's the Fed. We know the Fed chair dropped rates for the first time, in a decade, just a couple of weeks ago.
And the Fed has power, but they don't necessarily control all of this, David. Ultimately, what we've been seeing here are week after week of rattled markets in light of trade, in light of this bellwether that you just mentioned. It has been a bellwether ahead for stocks previously and for recessions. In 2007, that is the last time you saw the yield curve, as you mentioned, go inverted. And Wall Street is always looking for signals, always looking for information. This is one piece of information, as is the fact that trade with China, tariffs have been an uncertainty hanging over the market, as is the fact that around the world right now, you've seen economies that appear to be pulling back. And when you look at this full picture, you now all of a sudden have economists saying recession, that R word, ahead in the next 6 to 18 months. That's a very big issue for Wall Street right now.
And a big issue, as we know, for the White House as well, with this presidential race now in full swing. And you mentioned those economies overseas, Germany and China, both slowing down, among others. I want to bring in Terry Moran, who's live in Washington. And Terry, you heard the president say China's not the problem, but there have been economic impacts from this escalating trade war. And the president himself saying what we've seen in Hong Kong the last 48 hours is not helping.
That's right. Some serious headwinds for this economy, as Rebecca has just said, and a lot of it stems from the president's own choice to go to trade war with China. And there is a whiff of panic a little bit around the White House right now. As the economy heads into these headwinds, you are seeing the impact of the trade war, of the tariffs, not just in agriculture, but in consumer goods, rising prices for Americans. So much so that the president blinked yesterday. He postponed the last round of tariffs he was going to slap onto Chinese goods, the imports of consumer goods, electronics primarily, hoping, his Commerce Secretary Wilbur Ross said, to go easy on consumers this Christmas season. So you see the president, who has so much at stake here, his reelection essentially, is already kind of blaming the Fed and trying to dial down his own trade war as this economy stumbles.
Well, Terry, you make an important point there, because even before today, before this significant bellwether indicating recession could be possible and in the near term, Elizabeth Warren, one of the Democratic candidates, had already come out in recent days saying that a U.S. downturn is coming, that the warning lights are flashing. Rare for a candidate to do that. But Terry, this points out that this is already an issue and will no doubt become an increasing one in the days and weeks ahead.
And especially in a campaign year, the president is the one who gets the credit when the economy is good and gets the blame when the economy is bad. President Trump is acutely aware of this, but I'll tell you, he doesn't have a lot of ammunition on the fiscal side. There are a couple of ways of addressing a downturn. You can spend more, cut taxes, or get the Fed to lower rates. He's already hammering the Fed on that, pressuring them strong. But there's not a lot of appetite in Congress right now. The deficit is ballooning. Taxes have already been cut, and there's just not much room to spend right now.
Terry, thank you. It's that inversion yield curve I mentioned earlier. That's the bellwether. I want to get back to Rebecca, because for folks at home, that really doesn't matter much, other than it's been an indicator before that a recession could be coming. What matters really at home are the prices you pay on very common goods. We've already seen some of those prices affected. We've seen the farmers in the middle of this country affected. And as Terry mentioned, the president blinked in the last 24 hours when it came to those tariffs that he was going to impose in the coming weeks, saying he'll wait on common goods, on toys, appliances, until mid-December, saying he didn't want to affect Christmas shopping.
Right. I mean, for the people around this country, the biggest thing is what you're going to pay and do you have a job? And the issue is the ripple effect of these tariffs. That is the big question hanging over the U.S. economy right now, because they're being delayed now to December 15th. And some things are going to cost more money, very likely. But the other part of that is what companies do with those increased costs. If they're now paying more money for something to come over the border, what do they do about the jobs, the people who are employed to sell those items here in the United States? And that's the ripple effect that Wall Street is thinking about right now as it looks to the future next year and beyond.
All right, we're going to continue to follow this. As you can see on your screen there, the Dow closing down more than 800 points today. That's the steepest drop yet this year. Last week we saw a drop of 767 points. So today obviously is a steeper drop than that, and that's based on fears about the U.S. trade war, the escalating trade war with China, and of course that inversion curve today, which is a common bellwether that precedes recessions here in this country. It has before. Of course, it could be wrong this time, but it is a key indicator. So we'll continue to follow this and how it will affect American families. That's coming up on World News Tonight. I'm David Muir here in New York. Thanks for watching. Good day.
This has been a special report from ABC News.